as we are ready for our next session, tokenization, smart contracts, and the future of securities issuance and settlement. Now, before we commence with this session, we have an audio visual. Can we have the AV, please?
We believe the next step going forward will be the tokenization of financial assets.
Made a statement that every stock, every bond, every currency, every commodity, every piece of art, every bottle of fine wine, every collectible car, every piece of real estate, every private business, everything of value in the world will eventually be a token.
Tokenization will facilitate what you call a large value asset. An ordinary individual who doesn't have the affordability can become a part owner of a high valued asset. That is what blockchain will facilitate. That is what tokenization will facilitate.
Can we think of a way to combine the best of a regulated world with the best that tokenization technology can offer us? And that's what the Finternet does. The paper on Finternet was written by Mr. Augustine Carstens, the general manager and CEO of BIS, and I'm the co-author with him. The fact that the general manager of BIS, which is the central bank of central bankers, has shown this shows how much it is very much a mainstream idea.
Well, what an inspiring video. And with that, now, for all of us to delve into discussions on tokenization, smart contract, and the future of securities issuance and settlement, I take the pleasure inviting our illustrious panelists up on stage, and I invite you to join in with a nice warm round of applause as they join us. Well, in the meanwhile, as we look forward to welcoming Mr. Anand Narayanan, I would invite each of you probably to throw light on tokenization, smart contracts, and the future of security issuance and settlement. If we could have a statement from each of you before we commence, of course, with the round of discussions.
Thanks for taking the role of the moderator. Again, maybe I'll just probably first introduce myself. So I'm Anuj Rathi. I look after the security services business for HSBC in India. Having been in the industry for close to 25 years, I've seen the transformation from the physical era of certificates to dematerialized, and now, of course, at the cusp of tokenization. Clearly, tokenization is a revolutionary innovation, for digital assets. And clearly, once implemented successfully, it can offer a lot of transparency, efficiency, flexibility, cost and operational efficiencies, and the flexibility to trade anywhere at any time. I would say in true sense, it will really democratize, the access to financial products and enabled by a very stable, infrastructure. I would say it really unlocks a lot of value, and that is something it will probably disrupt all sets of industries as we progress, be it, assets, investments, real estate, even up to art as well. Again, likely that, tokenization will help us pave the way from, I would say from more of inclusion to well-being, where investors will have access, easier access and faster access, to investment products. Maybe I'll take a pause and I'll ask my fellow panelists to.
Sure. My name's Thomas. I'm CTO at NSCCL. That's the legacy name. It's now called NSE Clearing. The paper that Nandan Nilekani mentioned in that video clip, I don't know if you all glossed through it, that was written in 2017 by BIS. I'd say if nothing else, if all of us can just go and read it. So tokenization as an approach, as a possible thing to do, is been in the works for a really long time. As to what is allowed within the guardrails is something that we all need to have some awareness of, but it's happening around us. The advantages are well known, the pitfalls are obviously well known. So I'd certainly say we've got to go ahead of thinking of this as some nascent offering. The offering is very mature. As to what we can possibly do with it is something that we all need to decide on. Just thinking of an advantage, fractional ownership is something that can be achieved through tokenization. Yoshi, you next.
Hi, my name is Yoshi. I'm the co-founder, CEO of Alpaca. We are a US regulated stock brokerage infrastructure company. And then we're the world's biggest platform that supports hundreds of fintech startups globally to offer their retail offering of the stocks, fixed income, high yield accounts and stuff like that. How we are very much involved in the tokenization in many places is that currently tokenization has to be attached to real world assets, one-to-one backed collateral. And because we are US FINRA, SEC, and also DTCC member, that has basically the job to secure the fiat custodian of the actual real world assets, and the moderator's back, assets, we work with the multiple tokenization companies that has to use us to secure and guarantee that tokens that create and mint are backed with the real world assets one-to-one. And that's our job as Alpaca being the custodian broker dealer in the United States.
So I'm Nayana Ovalekar. I work as Chief Regulatory Officer and Executive Vice President at Central Depository Services India Limited, or CDSL. So I've been working in this depository space for last more than 3 decades and have been focusing on regulatory compliance and policy development and operations. So CDSL is a depository, one of the 2 depositories in India, and we have nearly 16 crore demat accounts with us. So the investor base is increasing, and we have to see as to how we can deepen the markets as well. And tokenization actually provides a way by which the investors can have wealth creation opportunities, and how will the primary markets or the existing markets function when tokenization happens and provide liquidity to illiquid assets is something very interesting which we can all have to look forward to. And how will the regulatory guardrails protect the investor interest is what we need to think about when we are talking about tokenization. Because I think tokenization is not just a tech story. It has to be inculcated and looked at as to how the investors' interests can get protected. So that's my take on tokenization.
Awesome. Good afternoon, everybody. My name is Anand. Sorry, I'm fashionably late. It took me more difficulty to reach this room rather than reaching Bandra Kurla complex. So, yeah, that aside, so I run a fintech startup called AllDRX. We are a real estate tokenization platform. For the very first time, Middle India can come onto AllDRX, and once they do their KYC, they can buy 1 square foot of Bombay, 10 square foot of Delhi. You can place an SIP like order to purchase 1 square foot every day in Bombay. You can sell it when you want to. That's what the power of asset tokenization is. And thank you for being there before me and holding the fort. So I have a quick question for you all. This new innovation called asset tokenization. So while I did hear your personal convictions around this space, do you think asset tokenization will create its own niche, its own place, a specific set of assets for which tokenization will work, which means it has its own place along with securities market? Or do you think some part of asset tokenization will actually challenge the way the securities market currently function? What are your views? Maybe Anuj.
Sure, maybe I can start. I guess, I would think there are early stages of innovation, so clearly for the foreseeable future, I would imagine, tokenization and the traditional products would coexist. Again, there are a lot of benefits of tokenization, but at the same time, there are some challenges on, say, interoperability, on regulatory clarity. But clearly, depending on the underlying assets, I'm sure, some of these products will create a niche, for themselves. And ultimately, that's what we would want, rather than fragmenting the market, we would want more of, deepening the markets. But I'm sure, the industry players, the regulators are working together to see, how does then tokenization converges into the mainstream financial products. But I guess it's important to have, probably parallel rails first and then convergence later. Once there is more stability, certainty, I guess that's where the convergence will take place and the market will grow.
Just to sort of put it succinctly, it's the future, it's the logical progression. We've all sort of taken part in it in different shapes or forms, or will take part in it in some shape or form. Given the fact that we've gone digital, logically speaking, it is the next step. So at some point, safety guardrails in place, we will take that step. Else we're sort of missing the journey. We've gone halfway there, we'll go completely digital. That is the future. If I can just give one example from 4 years back, just staying with the thought that I mentioned earlier, saying that a lot of us have already had exposure to tokenization smart contracts as well. So just using an example of smart contracts, at my previous employer, this is at least 5 years back. It was a large GCC for a global bank, not Anuj's one, a different global bank. We were looking at client onboarding to different lines of business. So it is not necessarily or not as quick as your Aadhaar KYC, it's much more detailed. But 4 years back, I was part of a small limited part of a POC we ran where this client onboarding would be done on permissioned sort of a blockchain using Solidity and the tech stack that's required, and using something called ZKP. I don't know if that's known across the room, or you can look it up. The other line of business would essentially go ZKP for that smart contract and then see if it is a valid customer or client, and then use that. So this was done 4 years back. I believe it's now a product. It's already in the works. You can read up about it. The larger point I'm making is these steps have actually been taken. Talent is available. So I sort of commend Anand for the fact that he's actually done it. It's not easy to pull it off in our ecosystem. And I'd like him to sort of speak a little more about what he's done. But to the original question that he had, this is absolutely the future. We've got to get there safely.
I think there are 2 points about really benefits of the tokenization. One thing is, as you mentioned, definitely accessibility improves to something that has been very difficult to have access. I think to me, tokenization is to create something that's make the real world assets very much fractionalized in a very low cost as an issuer. If you're creating actual securities that needs to be registered under the securities law, that costs a lot of paperwork, a lot of human cost to create those security, but creating a token, it's much cheaper to do that, which means that there will be a lot of tokens for a lot of people to have accessibility to different asset classes. So I think that's extremely benefits in terms of the accessibility improvements. However, the second point though is that from us seeing a lot of tokenizations, not only in India, but globally, what creates actual liquidity, which is more of the secondary trading or trading volume, we only see the real trading volume pick up of the tokenization of the real world assets that are already liquid. So I don't see too much of the liquidity of the tokens of real world assets of, for example, like luxury watch or some expensive cards. But we see so many trading volume of the tokens backed by US stocks like Nvidia or Airbnb stocks. So I think that there will be definitely continue to be a challenge of creating a secondary liquidity, trading volume liquidity of the non-liquid real world assets tokens. So I think we need to kind of continue to figure out the differentiation between providing accessibility or actually trying to create a token that generates the trading volume. I think there are 2 different conversations when we are talking about tokenization.
So I think that tokenizations and the existing markets, they have to coexist, at least in foreseeable future. Means they cannot replace entirely the existing markets immediately. But yes, the traditional markets, they have been built on decades of regulatory oversight. And it brings in, again, I'll talk about investors. The investor confidence and trust is there because of the legality which is accorded to the securities which are being traded on the traditional markets. At the same time, the tokenization offers certain unique advantages, like there are possibilities of 24/7 trading. Okay, so that is one possibility which is there. And also, the investors can have access to the either to illiquid assets or the assets which were beyond their capacity, like fractionalization can help in having access to such earlier assets which otherwise they were not able to access. So that is the advantage of tokenization. And I feel that the real challenge will be as to how do we converge both these systems. So suppose the tokenized markets, they grow rapidly. Will it create into, or will it lead to fractionalization of, fragmentation of the markets? Will it do that? That is the question that we need to ask. And, but I believe that if they develop responsibly with adequate regulatory guardrails, then maybe they will challenge the existing markets to adopt innovation. So I feel that it is not that either or situation. Both can coexist and both will become efficient. That's
I completely agree with what Nayana is saying. Even in our own limited experience, young platform, don't have years of pedigree like you all, but even for a young platform like us, I think there is a need for a third-party custodian, right? The real-world asset, the physical asset, cannot be with the platform, right? I am responsible to ensure that the trading operations happen on the platform, but the real-world asset needs to be kept safely when the tokens are being traded. So I believe it has to coexist in some way, right? And we, unlike you, Yoshi, where you operate completely on-chain, here the settlement process is still fiat, right? And I foreseeably, in the foreseeable future, it will continue to be fiat-based transactions. So which means, where does the fiat sit? Where does the actual physical currency sit? How does it move? So I tend to agree that it be a coexisting structure, but I guess it will find its own niche. Certain assets will go to capital markets. The larger assets require deeper markets will go to capital markets. The smaller assets, which are far more easier to go into tokenization, will go into the tokenization. I think that's how it will change. And on the secondary market liquidity, again, young, but we're already seeing 25% of the trades that we have are secondary trades. Our peak time, peak trading time, when everybody says no downtime, please, we call our CTO and say, boss, you please come late, but stay at 7 p.m. 7 p.m. is our peak time. Because the guy goes back home and then says, okay, let me see what it is. So absolutely right. These are coexisting structures, new markets are emerging. On that note, on the regulatory side, while there is lots happening on the regulatory side, in multiple forums, even at GFF, we are seeing tokenization being repeatedly spoken about. Everybody is framing their thoughts around how do we deal with this new innovation. But some markets have already taken the step. In many markets, a token is being called as a security. The respective SCRA definitions are being changed to include a token as a security. And then a market, an alternate market is being created where tokens are being traded. Nowhere in the world are we seeing tokens being traded in traditional stock exchanges. There are alternate markets that are emerging. There are certain other markets which are saying, listen, let's not call it a security right away. Like say Vietnam, for example, has told that no financially regulated assets can be tokenized. Which means you can't tokenize a share, you can't tokenize a bond, you cannot tokenize a sukuk, you cannot tokenize a fund, but you can tokenize gold, you can tokenize real estate, you can tokenize a painting, So every regulator is framing the right path. So it's either becoming a regulated financial product without it being called a security, and the regulator is saying, let me do a light touch approach, let's see how this market evolves, give the elbow room for this market to develop. Or the other extreme is to call it a security on day one and put the guardrails, the tall guardrails right away, right? Even in India, we are seeing IFSCA, the GIFT City, very progressive, one of its kind regulator in the world, which is a unified financial services regulator, has the powers of a banking regulator, securities regulator, IRDA, PRDA. It's in their charter to tokenize, to regulate asset tokenization. They've already come up with an asset tokenization approach document in February. So we are well on the way to see real-world asset-backed tokens being regulated by an Indian regulator, while it's an onshore-offshore structure, but still it will get regulated. But the constant debate is, what is the right regulatory environment for this asset tokenization, which in its fairly nascent stage? I mean, if tomorrow a regulator comes and tells me, Anand, you have to do regulator, I cannot afford any of you all to be my compliance manager. So how will I be able to afford, right? So in your opinion, what is the right approach? Is it at get-go, have a high-touch, highly regulated environment? Or do you believe it should be a low-touch regulatory environment? Have guardrails. Like, for example, in Singapore, you have a system where they say any tokenized offering below a particular threshold, where the volume of assets tokenized is below a particular threshold, the frameworks are far lenient. You don't need prior approval. You file the tokenized offering post a token offering being done, etc. So what is your opinion on, should it be light touch, should it be high touch? On the same note, I also want to ask you, what are the 3 assets that you all think should be the first assets that India should permit for tokenization? Why don't you start, Yoshi? I mean, outside in view on high touch or low touch regulation, and what are the 3 assets that you think will be the first one to go?
Okay, so if we directly put tokenized assets in high-touch regulatory environment and term them as security, the one benefit is that they get into the highly regulated, structured environment wherein there will be, investor confidence and trust in that particular security. So that is the advantage. But then there is a downside also. There could be compliance cost, additional compliance cost, as you mentioned. Okay, so that could be there. In addition to that, it may slow down the speed of innovation as well. Okay, so that is the risk that we carry if we directly put them into high tech. What I feel can be done is that start with a low touch approach. So have these as an alternate financial products, but with some kind of limits, like maybe the type of assets that can be taken in, or the limits on the participation as to who can participate. And build on that. And then as we gain experience, then scale it up, and then go for the high-tech regulation. I think that will be the balanced approach that we should take, because see, innovation per se is very good, but then we'll also have to look at the safety angle. And it can be sustainable only if it looks at safety and trust as well.
Makes sense.
I think that's what
and what do you think are the first 2-3 assets that we should look at tokenization?
So I feel, see, if we look at tokenization, actually we are looking at some asset where there is a problem which can be solved by a technological solution. Okay, so that should be the asset. I feel the real assets, okay, those are the ones which are high ticket items, and we face quite a bit of illiquidity, as well as the transfer procedures are also very difficult, So if we tokenize that, maybe it will democratize returns, and it will make it as one more avenue for the investors to invest, and it will be within their means. So I think real asset is one. The second one I'll choose will be the corporate debt, the high value corporate debt, wherein why I am choosing that is because everybody knows about bonds, means bonds are known entity. And it will be easier to have legal backing onto those tokens. And then it will deepen the bond market as well. So that was the second. And third one, again, I feel infrastructure debt, because that is also highly capital intensive. And right now, I think those are inaccessible for the retail investors. So if we do the fractionalization, maybe, we can actually have that.
Great. Thank you, Naina. What about you, Yoshi?
I think in terms of the regulatory framework, high touch or low touch, even though I come from my background to Lehman Brothers securitization, so I did all the subprimes, and I think about that a lot. And even though I work with the hundreds of the fintech startups, I'm very much care about regulation and compliance and protection.
I'm going to talk to you about refund of my money from Lehman after this meeting.
Oh, you talking about Lehman? Yeah, because this whole tokenization, it just always give me a flashback of the securitization hype when I was doing all the securitization of the ABS CDOs. So, but I think when we think about the regulation, there are only, in my mind, two things that we have to be really caring about. One is investor protection. So are we making sure that we're explaining transparently how things work? Where is the risk? Where is the counterparty risk? Especially tokenization, there's a different SPC or SPV that issue the token. So where is actual risk lies? And that needs to be clearly explained. And those things have to be there for the investor protection side. And the second thing is that who's actually owning the real world assets? Because if we are not sure about ultimate beneficiary owner of the actual collaterals, it creates some kind of money laundering situation. So I always think about making sure these things are done correctly. Then it really doesn't matter if it's high touch or low touch, because these two things have to happen as the kind of swinging of the high touch or low touch. It comes in the middle. So I always think about that kind of foundational why compliance, why regulation exists, and I think about those two narratives of the regulatory framework. And in terms of one asset class that needs to be, I want that to be tokenized, I'm actually very much agree with what you just said. Those infrastructure bonds or corporate bonds that everyone kind of is aware that we want to have accessibility to. But if as a retail investor trying to have accessibility, most of the time user experience really bad. You don't know how to get into the position. You don't know how to actually buy those things, and probably minimum lot is very, very big. And usually those infrastructure bonds, because of how the settlement system is built up as a software layer, you cannot really fractionalize as it is, which I think tokenization works really, really well. And it can be distributed to not only the retail investors in India, but retail investors globally. That creates a lot of capital sourcing power. So that I'll be very, very excited to see.
Awesome. What about you, Thomas?
So the popular answer always is going to be to allow innovation, keep it low touch for a particular amount of time. Once it matures, make it obviously high touch, and depending on which assets are being spoken of. The earlier session was on investor awareness. So they alluded to some points being there are so few RIAs and there's so many MFDs. So when we're still discussing investor awareness, to go into niche products like this and open it out to the market is certainly something that we should do very cautiously. So we've got to proceed with care, but obviously my approach too will be to even allow the innovation. To be honest, I didn't know about all DRX till I actually read up about his company. I was not aware of it at all. So we're still at that stage where we know the concept, or we've read about the concept. We've got friends who've probably told us about the concept, but we think it's happening overseas. Please look up his company. I'm sort of actually pitching for him. Do go to his website, read up about it. Whether you invest or not is obviously an individual decision. The assets that can be tokenized, they've already sort of mentioned the fundamental ones. I'd say going off at a tangent, something like art, going to fractional ownership, something like IP. The reason why we don't have a lot of R&D, they say, is very expensive. So if we can tokenize IP and then make fractional ownership of IP, maybe you'll get a good price for the final product that you plumbed so much of money into the R&D. So that, according to me, is something that can be thought of. Thanks.
Thank you, Thomas. I'm going to take you as a brand ambassador the next year.
Again, I mean, in my view, it's very difficult to not categorize tokenized assets as security. And, so yes, we clearly want a balance to ensure there is innovation. You're not stifling innovation, but at the same time, probably it is still a security. And the question is also the reach of these assets. Now, if you are really looking at, say, large number of retail investors, buying these securities, and it's hard as a regulator to not keep, investor protection at the heart of it, and probably rightly so, because if things were to go wrong, probably then it will be like one step forward and maybe 3 steps behind. So yes, to that extent, you will need that level of, regulatory oversight. But at the same time, yes, it's a phase of innovation, so you have to ensure, you get the right balance around it. So yeah, that would be my view. On the 3 assets, probably similar thoughts. One, I mean, if you are looking at tokenization from an India perspective, one, maybe it can be more to start with, say, the sophisticated investors and not really targeting probably the retail. So things like art can always be a form, real estate, what you're doing. I mean, I'll probably do 4 because 3, 4, and 1 I'll give my personal choice. And clearly, as my panelist said, on the bond side, and gradually when we're looking at, say, retail participating in government bonds and et cetera. But along with IPs, I mean, I would want music rights to be, tokenized. I mean, I would definitely be an investor in that. As I said, that's 4th on my own personal interest.
Amazing, isn't it? I mean, imagine you can tokenize a Shah Rukh Khan movie, right, and get rights for it. One of the most interesting assets that I have come across is there's a company in Dubai, which is the largest owner of construction equipment, which he leases to construction companies. And one of the assets that he has is golf carts. And he's the largest lessee of golf carts to golf courses. And we're talking to them to see how golf carts can be tokenized. Rent generating asset, it's a depreciating asset, but the cash flows kind of compensate for the principal return. So yeah, I mean, interesting, isn't it? I mean, imagine you can buy a portion of a golf cart and then, so yeah, on that note, very interesting. So we have seen institutional participation was leading the wave of the first set of tokenization projects that we saw around the world, right? The BlackRocks of the world, HSBC tokenized gold in Hong Kong, But from my limited worldview, I've seen those as, they've always taken liquid financial assets that were already liquid, assets that were already getting traded, while some of them did take private equity funds, etc., which are illiquid, but largely they took financial assets, tokenized them, with 2 broad reasons. One being efficiency. Things can be done faster, like you said, things can happen after market hours. The cost of transactions were cheaper. It allowed a guy sitting in Norway to invest in a tokenized T-bill bond in US, and hence, so more convenience and cost were the reasons. Very opportunistic issuances, but institutions did participate. That was the first wave. On the other hand, were younger startups, one of us, and there are a few of us around the world, who are taking physical illiquid assets, doing a lot of heavy lifting on bringing that those kind of assets to the market, right? In your opinion, and let's be a little more focused this time around on India, where do you see participation between larger financial institutions in India, and these startups coming together on the space of tokenization, How do you think these 2 ends of the spectrum, the young startup and the large reputed financial institutions, how can they work together? Where would they find common resonance? And how this working together can benefit India? How can tokenization, startups and institutions coming together, how can they benefit the common man on the streets of Bombay? Why don't you go first, Anuj?
I mean, you're right. See, now clearly a lot of institutional players have become very, very active, and they are allocating serious capital to it. And again, at HSBC, we have our own Orion platform where we facilitated, tokenized bond issuances in Hong Kong, Luxembourg. And again, it went through the transparency with full regulatory oversight. We are looking at tokenized deposits, tokenized gold, as you said. And again, I think as a large institution, I think that experience, that expertise is something which we eventually will want to bring to India, because we've not done that in India so far. And as the panel discussed earlier, instruments like the government bonds, muni bonds, receivables, etc., is where some of these experiences can help from the large institutional players. But I think clearly if we have to really develop tokenization at pace, I think we will need the fintechs. Large institutions have its benefits, but at the same time, yes, probably the agility part or the financial innovation can probably come more from the fintechs. So I think it can be a great collaboration. It can be a fantastic collaboration to get tokenization at scale and at the speed that probably is warranted. So I think there is space for both, and there's a need for both to come together. Get the expertise, get the capital, get the expertise from fintechs, and it can be a great collaborative effort.
So I should keep my shop open. You're not going to buy me out.
Absolutely.
Yeah, the point is made. So the resources, the money is going to come from the large institutions. I would rather that they run some sort of incubators. I believe a lot of educational institutions, at least the premier ones, run incubators. Run incubators, give people that base resource to set up. We've got to take a chance somewhere. So bring in your resources. The understanding of existing compliance is key. So maybe the fintech super or laser focused only on developing that product and delivering, but might not have hindsight that the large institution can bring. So run the incubator, keep the guardrails in place. Talent is certainly available. We've got a lot of GCCs in India. I believe talent's not a problem. You've got to inspire them to join that journey.
I think which asset classes that startups should be working on more. To me, startup founder, myself, I only think about product market fit. What are the actual customer demands? Because if the big corporations, like big banks, are doing tokenizations, they clearly have a humongous distribution, which means their customer acquisition cost is very low. So they can work with the very small margins, or they can even do a loss, and that would create press effect that their public share price goes up. And there's, I feel different type of reasons why they do that. As a startup, we have to make money, and we have to make sure that we have to grow. So I think I have to think about always who are the users who's actually thinking about wanting as a demand, and is that assets that we're tokenizing are something that people are wanting. That's what I would focus on. So
I feel that the institutions will bring in the capital, they will bring in their risk management expertise, and they will also ensure that the marketplace is regulated well and is compliance oriented. At the same time, as you mentioned, the fintechs, they are agile, and they can then provide the technology layer. And maybe the compliance layer could be provided by the institutions. Both have to work together. And unless institutions come in, tokenization may not get into that kind of scale. So I feel it is needed.
That's true. Fantastic. On that note, I think we are broadly in agreement that asset tokenization, a token backed by real-world assets as an innovation, is here to stay. Keep investor protection in mind, but allow innovation to flourish. And at some point of time, institutions and startups need to work together to build momentum and depth in this market. On that note, I think we have a minute and 30 seconds. If anybody wants to have any question, we're happy to take the panelists here. Or I'll just give it back to GFF, who's going to scold me for coming late.
Well, ladies and gentlemen, it's been indeed such an insightful, inspiring session. Let's give all our panelists a nice, good round of applause. And I thank each and every one of you for this compelling round of discussions. Please do step forward for a group photograph. Ladies and gentlemen, once again, a fabulous session on tokenization, smart contracts, and the future of security and issuance and settlement. We'd like to thank all our speakers. It has been an honor to have you join us for the Global Fintech Fest 2025.